Hey guys, it's Jonny. Real estate has historically been a very popular way for people to invest their money and build cash flow and generational wealth through investing in different forms of property. There are also a lot of courses, a lot of videos, a lot of education programs online about investing in real estate today, as it seems to be a current and hot trend. But what I bet you didn't know is that there are multiple different ways to invest in real estate beyond probably the initial ones that come to mind. So in this video, I'm going to walk you through 6 different types of real estate investment. And in some cases, putting as little as €1 in real estate investing. So let's get right into the video. So let's begin with residential real estate, which is probably what first comes to mind when people think of what is traditionally real estate investing. Residential real estate will generally take the form of purchasing a house or an apartment where you then rent out that property either to one tenant or multiple tenants if you're doing like a multiple occupancy renting by rooms kind of model. And of course, this is an interesting way to invest in real estate. Now, looking across Europe, depending on where you invest, what kind of property you're investing in, and what your overall property investing strategy is, you can get good returns on this strategy. If we look at the chart I'm going to show you on the screen now, you can see that typically you can get between 5 to 7% return in most European cities when it comes to real estate investing. In addition, unlike investing in the stock market, when it comes to real estate, if you want to use leverage, that's to say debt, to invest, then you do have that option available. You can, for example, purchase a €100,000 property, put in only €20,000 down, again, for example, with €80,000 being financed against the bank, and then you pay off over the period of the loan. What is known colloquially these days as OPM, other people's money. And by using leverage or OPM, you can essentially put less money down and generate nice cash flows from those residential properties. You know, several hundreds of euros, pounds, dollars a month, depending on, again, the property, your strategy, location, etc. But at the same time, you've only put down, in this example, let's say €20,000. Of course, you've got to deduct costs, the mortgage payment and all that, which we'll get to in just a second. But what I'm trying to say is you can use leverage to bring in significant amounts of money. Now let's look at the cons or some of the challenges that come with investing in residential real estate. Although you are able to apply for a loan and get some of the property financed by the bank and then paid off over time, typically, in Europe, you will have to put some money down first. As I say, you know, it might be a few tens of thousands of pounds, again, depending on the property type. And of course, that's not something that's accessible to everybody. It will take quite a bit of time for you to get to that stage. Now, there are, you know, obviously exceptions, the ways to invest, you know, perhaps getting 100% or a 95% mortgage, but these are very, very difficult to get and do not come without their risks. In addition, going into residential property, you'll need to do extensive research into what it is you're investing in, what your goals are, what kind of properties you're looking at, what area is right for you, what tenant profile you want, etc., etc. You know, there's a lot of research and study that needs to go in before you can make a decision on how to invest and where to invest your capital. The next con is that these kind of investments are often painted as passive income when that couldn't be further from the truth. You know, there is a lot of behind the scenes work that goes on that means that real estate investing in residential property is not at all passive. You have administrative tasks to do, such as preparing contracts, finding tenants, etc. You'll have maintenance which can come up. If you've got issues with the property, then of course that's going to take time and energy to resolve. And not to mention as well, you know, high costs that can come with this if there are, you know, several things going wrong at the same time. You know, there are costs associated with running the property that do not come cheap, and you need to be sure that you can cover those even in a period where things are not going well, and you know, you might have a vacant property, for example. You need to be able to still be able to cover your costs. And finally, a theme that seems to be becoming more and more prominent in Europe is government regulation around residential property. I won't go into all the details or give an opinion. That's not the point here. What I'm trying to say is that in most cases, if you're a landlord, residential property legislation is constantly changing, and so you as a landlord need to keep that in mind and consider the challenges that might arise by possible changes in the legislation going forward and the implications of, you know, current legislation that is being discussed or that is in place, because that can affect, you know, legal processes. It can affect your ability to collect rent, amongst many other things. And again, it's something that you need to have deep pockets for, so to speak, to be able to cover the cost of things if things go wrong and when things get bad. Now let's move on to the next kind of real estate, which is short-term rentals or holiday lettings. Now what you've got here are essentially your properties rented out on Airbnb, on booking.com for example, or perhaps even a B&B would fall under this scope as well. Essentially for short stays where people are staying, a few nights, maybe a couple of weeks, maybe even in some instances up to a month, depending on, people's travel plans. But essentially this is not going to be someone's long-term home. It's going to be somewhere where they stay for a short period of time while they visit a particular city or location. Now people get drawn to these kind of properties because they can give you very, very high yield. Because it's a short-term stay, then of course the price per night is going to be a lot more expensive than the price of a residential property. And depending on the location and the quality of the property as well, you can also charge more depending on, what the competition offer is in the same area. If you hit a tourist hotspot, then you can be making big bank from some of these holiday rentals as well. And if you really got your property in a spot-on location and it's a really good quality property, then you're probably going to be able to have a high rate of occupancy of your property, and it's going to go further towards helping you secure those high returns on your investment. I did mention competition, and the competition should not be disregarded. There is a lot of competition, and not just other short-term rental competition. We're also talking, as I discussed in an interview with the Wealth Warren, hotels are your competition as well. Your property needs to be pristine, it needs to be spot on to be able to compete with the wider tourist sector properties that are available for tourists to stay in. And as a result, making sure that your property is clean and in tip-top shape, the costs can add up very quickly with cleaning, maintenance costs, buying furniture and nice decor for the apartment that can really cost money as well. Whilst at the same time, people are staying there for a few days, for a week, they're probably not going to take as good care of it as they would their own home. So, you may expect more things to go wrong with a short-term rental property from that perspective as well. As these are short-term rentals as well, and they might be in tourist hotspots, it can be a very seasonal business. And your property income as a result will only be as good as the tourist season in a given month, or year was. And particularly, if you're in places like Spain, where you have a flood of tourists coming in from between June and, mid to late September, then all of your income is going to fall in that period, and you're going to have some very, very quiet months throughout the rest of the year. So if you have a very quiet summer, then it can make for a very challenging rest of the year, for example. And similar to residential property, a lot of cities are also starting to crack down on Airbnbs and short-term rental lettings, putting more administrative obstacles, regulations and licenses as requirements for short-term property owners who are wanting to rent out their properties to others, essentially giving them more hoops to jump through. The next type of real estate you can invest in is commercial property. Now, I won't touch on this too much. I'll be very brief here, but essentially this is real estate, that is used for business purposes. It could be, for example, a shop, it could be an office, it could be a warehouse. Any property that's being used for business purposes can essentially be considered commercial real estate. Now, if you're in a country where the economy is generally going well, then there's probably a good level of business demand for commercial real estate, so it can make it quite easy to find a tenant. And at the same time, business tenants would typically be in a property for longer. So a lot of your rental contracts in a commercial property would probably be more long-term and are less likely to be broken in a short period of time than a residential property, for example. Depending on the size of the property as well, what kind of activity it is, what kind of facilities it has, you might get really nice cash flows as well. However, when it comes to commercial real estate, getting financing is typically a lot more difficult when you go to the bank. At least when you're in Spain, you can get up to 80% of the property's value when it comes to a residential property, whereas it's typically only 70% if the property is registered as a commercial property. So as a result, again, you typically need a lot more initial capital to get started when it comes to commercial properties as well. And I think if you're doing commercial property as well, then it generally makes sense that, your company is doing it on a much bigger scale than just one unit. Probably you've got a dedicated company set up where you're buying commercial properties and you've got that capital where you can buy, shops, offices, warehouses, and then, rent them out to businesses. Now, the next type of real estate is still technically commercial real estate, but it's much more accessible for the everyday investor. It's something I do myself. That's renting in storage units or parking spaces. I personally invest in storage units here in Madrid. I have one currently in the center, and I'm currently finalizing the purchase of another one as well. So be sure to watch out for videos on that when they come out. And what I really love about these kinds of investment is that you're investing in real estate, but it's a very small initial capital, and you don't need to use leverage for it. Sure, again, you need maybe a few thousand euros euros to get started, depending on, again, location, size, the characteristics of the property, etc. But it's much more accessible to the everyday investor. It's also much lower maintenance than the likes of a residential property. There's not really much that can go wrong with a storage unit as well. As it's not the kind of property where someone is living, then of course there's much less regulation, and you as a tenant, you're much more in control of how you go about handling and managing your property. And because the maintenance is so minimal as well, there's not many costs associated with it. I've talked about it in Spain. Here we have a couple of service charges, very small amounts, and a very small amount of property tax that I have to pay once a year. So there's not really many major costs associated with the running of or owning a parking space or a storage unit. And if you hit the right location as well, you can actually find a lot of demand for these. In Madrid and in Spain in general, there's a lot of old properties where people have accumulated a lot of things over a period of time, but they just don't have the space to store it in their properties. So there's a real need for storage units and parking spaces as well. There's a lot of cars on the road in Spain. There's not always free parking in every neighborhood. And for security reasons as well, a lot of people might prefer to park their car in a secure or underground parking space that they're just paying every month. So, there is demand there if you look in the right places. On the con side though, as I say, it is very small scale, and although you will get some cash flows, it's not life-changing, maybe a few €100 a month, if that, again, depending on what it is you're investing in. So it's not going to be life-changing money, at least not at the start, unless you really go for it and acquire a lot of parking spaces or a lot of storage units, or if you really have the money and you buy an entire facility or an entire parking lot, then of course you can start talking more about that serious cash flow. The next method is something that I discovered recently, which is real estate crowdfunding. I'm going to use an example of a platform called Urbanite, which is a Spanish crowdfunding platform, which I started using recently and was going to invest in a couple of projects on. With Urbanite, what I can basically do is I can find a range of projects that are being financed by different property developers, but instead of going to the traditional banks, they look to source a part of their investment from individual investors. And this is where you come in, where you get to invest in the project and you can make a return. Depending on the project, it can typically be from 7% upwards. What they'll normally do is they'll present different scenarios. They'll give you details about what the project is, the time scale for completion, and they even do Q&A videos for specific projects before they go live as well. And for me, this is something I found really interesting because there's a lot less research required. These companies, they've all done their research on where it is they're building, where they're developing properties. They generally have a lot of experience with what they're doing. And you as an investor from as little as €500 can invest in that project and multiple projects for that matter of fact. And, over the course of the project, depending on the type of return, whether it's dividends through rent collected or whether it's, a return on your investment upon completion of the project, then you're getting, a return on your investment and you're investing in real estate for a low price. However, of course, it's not without risk. Things can go wrong. A license might not be granted, or a project might be delayed, for example, or it simply might not perform as well as it is. So as much as there's less research required, you do need to be aware of the risks that come with real estate crowdfunding as well. And you also need to be aware that some projects become very popular very quickly, and within 20 seconds or a couple of minutes of the project being live, it can be completely financed to 100%. So the platform has introduced some measures to try and combat that, but do be aware that you do need to be very quick and you have to be online at the time the projects go live, which is typically 4 p.m. in the afternoon Spanish time, which, it's not ideal for everyone if you're in Europe. If you are interested in Urbanite though, I will leave my link in the video description for you to sign up. You will get a little bonus, and I think I will too as well if you sign up. And the last form of investing in real estate that I'm going to talk about in this video are REITs, which are real estate investment trusts. Now, a real estate investment trust is essentially a company which is quoted on a stock market where its income or its activities are principally centered around real estate investing. That's to say they generate income from real estate activities, whether it's, rental income from commercial properties, rental income from residential properties, or from property development, or even financing properties as well, depending on the type of company. You can find a load of different REITs out there if you do your research. There are a lot in the US. In Spain, there was one that I was investing in at one point called Merlin Properties, that they hold properties across Spain, multiple shopping centers, multiple office buildings on Paseo de la Castellana in Madrid. And they're also behind the development of the Madrid Nuevo Norte project, which is a really big real estate transformation, which is going on in the north of the city. Now, REITs are very accessible if you have an investing platform. So for example, Trading 212, Digiro, Interactive Brokers, if you can find REITs on these platforms, then you can invest in them with your money as you would any other stock or ETF. Because you're going through your broker, essentially the minimum investment is the minimum investment required from your broker. So, in the case of Trading 212, you can invest from as little as €1, £1, $1 in REITs. Imagine that. And you're investing in real estate. Again, these REITs are generally pretty knowledgeable. They've done their research. They know what they're doing. And if you have a look at the kind of projects they're doing, you can generally make an informed decision as to whether it's something interesting or not to you. REITs tend to generate you income through dividends as well. And these can come quarterly or even monthly in some cases. So again, you're investing in real estate with lower capital than if you were buying a residential property or a commercial property, for example. But you're getting a small dividend in return. And of course, if you want to keep reinvesting, then those dividends will grow over time. That said, because these are generally quoted assets on the stock market, then of course they're prone to fluctuation. They could go up, they could go down. So you do have to keep that in mind. And when it comes to capital gains, there's not really much of a prospect of returns from a capital gains perspective. So the potential for capital gains as a result is not so high. And of course, because your income is mainly coming from dividends, then they're going to be taxed like dividends wherever your tax residence is. So you do need to be aware of that, need to understand how it works. And probably, you're not going to be able to get maybe some tax benefits that you would have got if this was true real estate income in that sense. So guys, I hope you enjoyed this video. As you can see, a lot of different ways to invest in real estate. Not all require, a significant level of risk or a significant initial investment. And so I think it's safe to say that really anyone who's into investing can invest in real estate with very little money as well, because there are so many different forms to do it. Leave a comment and let me know which type of real estate are you investing in and which one is your favorite. So next time, I'll see you on the next one, and let's get this money.